Trading losses hurt. Accuracy fix is the indicator you can use so that you don't feel hard, rather trading losses feel like a pinch. When you will win at a rate of 70 to 80%, the remaining 20-25% will not bother you very much. Especially if you consistently win 70 to 80% and your pro- profit from profitable trade is much higher than the losing trade. Now, this is a mathematic everybody knows. But what everybody don't know is how to make it possible. Let me introduce you the indicator that make it possible. This indicator we name as accuracy fix is a result of a long-term research and a practice. I understand your trust level is very low, whatever I say you, but if you keep next 5-7 minutes a open mind and let me prove all these things, whatever I am saying, with example over the chart, then at the end of this short video lesson, you will be agree with me that yes, it is possible you can achieve 70 to 80% hit ratio, not depending on any analysis, not depending on something which may or may not work, but you can actually confirm 70 to 80%. It's not easy. It's requires certain work to do that I will explain in this video. But I can confirm you that if you start using accuracy fix in your trading, then I guarantee that you will not feel losses like a heart, you will feel losses like a pinch. Because when you will win more often, losing will not bother you. Let me show you what we will cover today. Today, first, I will show you major market, Nifty, crude, gold, and Bitcoin to prove that yes, it works in different market. I will show you how this indicator work, and I will show you a couple of examples. I will teach you, and I will also show you with data. For example, here from January, every time we got a confidence level above 85 or below 85, minus 85 means it can be trade from short side. I will show you all those. Hang on with me. In Nifty, we not only noted down the date but also the time, so that when you will have this indicator, you can straight away go to the 1st January 13-15 candle and you can see what happened and what result. In January, there was 27 trade in Nifty. Among them, 20 was profitable. That's a 74% hit ratio. That's again validate my claim that yeah, it can get 70 to 80% hit ratio. Not I'm mentioning that it also made 4,74,300, but because I am not here to attract by the return. I am not a financial advisor. I can't do that. But then I can guarantee that I can teach you something so that from now onward, trading losses never feel you pain, never bother you, rather it appears like a pinch. So that you stay confident, remember one thing. Enter at the right time, book the profit, enter at the wrong time, take the loss. Very simple logic, everybody knows, but how we can actually achieve that? Simple 3 step, open the chart, wait for accuracy fixer to move above 80 if you want 80% level to operate. If you want lesser confidence level to operate, let's say 75, then you will wait for the accuracy fixer to move above 85 and you will get the 70 to 80% hit ratio if you follow few important steps. I will explain all of them here. So let me show you first a quick glance in the chart. Let me show you the recent few trades and say the gold. For example, if you see recent times, let me show you few losing example also. The plus 85s means you can expect a positive rally, minus 85 means negative rally, plus 85 positive rally, minus 85 negative, plus 85 means positive, minus 85 and minus 85 all are negative rally, right? That's pretty simple. A two-way you can read the indicator. One is that this line will move below 85 or it will move above the 85. This is one thing, and or when it will happens, you will find a on the chart an indication like this, right? It is very easy. Let me show. This is really an indicator that is plotting. Sorry. Right. There is a couple of things we need to understand. It's very important, so we will go through them. First thing first, number one, you can now understand that if you get a plus 85, it's a positive trend indications and you should go for long trade. A minus 85 is the opposite, a short trade. Similarly, I already mentioned that a few market is not required 85 because at 85 confidence level, you will get hardly enough trade. For example, in crude oil, I prefer 75 and in stock 60% is okay. So in major stock like say any stock in Indian market or any stock in international market, no matter what, stocks generally works well at 60% level. There is three things and that is the key of achieving 70-80%. Along with these is understanding when your indicator, the accuracy fixing, move above 85 or move below 85, what I will do? I will straightway enter the trade or I will wait. There is three things we need to understand. One we call jump, one is pause, and another is change. What is jump, pause, change? These three things is the key. Now, with the accuracy fixer indicator scoring plus 85 minus 85, and these three things will get 70-80% winner. And more often, the winner are so large compared to the losses that you will never feel this type of pain. Instead, you will feel every losing trade is like a pinch, not a pain. So, what is the jump? Jump is a candle, generally a large candle with little shadow, and sometimes it's a candle where you see open equal to low or open equal to high, a relatively large candle, less shadow. This type of strong candle indicates that you should immediately trade on the breakout of the high or breakout of the low in case of short trade if you get a minus, right? Now I understand that you may ask that how large, how I will identify. Don't worry, because in case of this type of handle where you have to jump, a asterisk mark appear, right? A asterisk mark appear here. Here, if I able to show you, then you will find here. Here is a candle. Okay, yeah, that's it. That's it. This type of asterisk will come, right? and whenever the large candle appears, right? So it is inbuilt into the system. It is inbuilt, but with little practice, it can understand. It is very easy. I already mentioned that in case of jump, one conditions could be that fill body with no open high, open, sorry, no lower shadow, right? This is the jump condition. Another jump condition is that yesterday you got a minus 85, right? And the trade not executed. That means the candle in which minus 85 appears, the low didn't break. And next day, market gap down. Now, if you see that in these conditions, the indicator is still below the 85 level or holding confidence level, then this is the ideal situations where you have to jump. Let me show you an example. Okay. Now I will show you two trades. One is a conditions where Nifty moves below 85, right? Here you can see this line move below 85. And it's not a straightaway jump conditions, and this low is never market goes below this low, so no trade happen. But next day during the morning, you can see that market open with a gap down, and it's open below the low of this candle. My question is that should we enter here? The answer is no, because you can see here it's not maintaining the 80% confidence level. At this point, it is at minus 76.84. However, here you can see that it moved below 85, and next day market opened with a gap down below this candle low. And you can see the reading is still maintaining below 85, right? At the open itself. So we can jump here. We can straightway enter the trade here. So if I show you a 15-minute chart, then you have ample time to react here. And I believe that 25,000 is a 25,000, 25,000, 10, 30 is a good estimate that your trade will pass through. So this is one example when you have to jump. In another case, we call it pause. What is the pause? Pause is something in, suppose in a particular candle the trades appear and then it's never break, and you can see market start going down and candle start making lower high and lower high. In that case, you will fill the candle high to enter. Now here one conditions you need to understand that if it is 85, all this candle must be the red candle. A change is color change. That means, for example, suppose you got a candle where you get 85. So it's a long indication, but then when you will enter after the collection. So you will wait for a red candle, a bearish candle to appear, and sustained breakout of this candle high will be the trend. Let me give you an example. An example, if I get, see here, minus 85, all right, and it's not any jump condition is there. I'm just talking about the high level in another video. In our full course, all those training I will get. But then you can see here is a color change. That means it's a downtrend indication, a short trade, a green candle we are looking for to appear and break up this low. We enter the trade, right? You can see here this candle, the high didn't break, and next day, and then a red candle appears, the high breaks here. So we entered here, it was a losing trade. So a profitable trade, losing trade. But then you can see that what happened in a profitable trade and what happened in a losing trade. So this is not, this trade didn't executed in this case, the trade execute, and next day we exited at loss. So when we lose, we generally lose one candle at max, and when we make profit, it's a good rally we make. You can see in this the same true cases in gold. This fact is well known to all trader, nothing fancy, but then this tool make it possible. Everybody knows, but how to do, nobody knows. And that's this trade, this help us, right? Can see that plus 85, a big rally, minus 85, a big down. For example, in Bitcoin, can see that 85, right? It's move above 85 here. It's a minus 85 followed by change, right? You can understand it's a green candle change, right? Red to green, a short trade. Plus 85, market didn't move above, right? And then a red candle appears here. So we got a change. We will enter at the break of this candle high. But then you can see that the confidence indicator is turns opposite side. So we didn't enter this long trade, but then this trade appear, right? And you can see here it's a positive 85. This plotting is a little difficult, but then you can fix it. This plus 85, right? You can see clearly this line move above this, and we entered above this candle. We got a very good rally here. So this is at the high level discussions, and you understand that if you don't know how to get 70 to 80% accuracy level, you should always expect constant second guess before entry, jumping in late and exiting too early. By the way, how we will exit and what trailing stop loss we will use is covered in this course, right? In full course. You should always look for, should always expect following fake trade, fake breakout, that collapse minutes later, if you don't know these things. Uh, Confusion, painful losses, regret, low confidence, all those things basically happen for you because you don't know how to get 70 to 80% accuracy level, consistent level. Is now the good time for fix your accuracy? Yes, it's actually overdue. So remember, enter at the right time, book the profit, enter at the wrong time, take the loss. So join, experience 70-82% accuracy level with this particular indicator. We call it accuracy fix. Trade couple of major market and experience positivity in your trading day after day. You will get rid of the frustrations. Losing will never feel much painful. You will enjoy the process and you will make money too.